Good afternoon, everyone. Hey guys, this is Bruce Marshall from Simpler Trading with the nightly market update for Wednesday, February the 28th. Happy Wednesday, happy hump day, and happy chop day. As you can see here, I've got the ES on the screen, and on the right side, on the left, is the NASDAQ and the Russell or the IWM. And we had a lot of chop today. Let me move this over and we'll jump right in. This is the ES. And interestingly, the black right here, that's the cash session, the daily session. This is the overnight session. The gray, light gray, is overnight. So last night, or yesterday, this is yesterday, we were coming in, very strong into the close here. 5093, and then last night in the overnight session really took a nice nosedive here down into 5063 kind of range, and then kind of started making it back up. And we came out of the gate this morning, as you can see, kind of straight down, straight up, straight down, kind of chopping here. And I was looking at this going, I had levels under here, and I said, well, if we break those and we take that overnight low out, then we're going to go, it might turn into something really ugly. And fortunately it did not, and we went back, back and forth, back and forth. You can see that level up there was a nice, we had a lot of resistance up there at the same place, and we actually had resistance here and here. Kind of took that out as we went into the end of the day, and we're actually going a little bit lower in the after hour session right now, but we're down about 20 right now. But all this chop, so we're going back and forth, during the day, straight down, straight up, straight down, straight up, straight down, straight up, straight down, straight up. And we ended up down 8 points on the SPX. And so that's a lot of movement to not really go anywhere. And this is kind of the back and forth action is what we've been seeing the last couple of weeks. But in the last couple of weeks, we may get 50 points up or down, or 100 points up or down, crazy moves. This is a really tight range, and it is it's because the market is still trying to digest what happened last week. And what happened last week right there was the NVDA earnings report, right? So off that low, again, this is the ES, off that low to the, I believe it's this high, might have been this high, about 170 points. I mean, basically straight up. That's, maybe it was here, and that's really moving in a very short period. That's 1 week ago. That's last Wednesday. This is today, right? That's really moving a lot. And since then, we have just been kind of digesting that move, trying to figure out, are we going to continue to go higher here? Are we going to go lower? And of course, no telling. But notice that, see Wednesday right there. If we go to our old friend NVIDIA, that's Wednesday after the close. And then of course we all know what happened there. If you can't turn on the news without hearing about NVIDIA, and kind of the same thing, digesting this move, etc. If we look out here on a longer term chart of NVIDIA, let me switch this over, because NVIDIA actually outran all of my indicators on the upper end. Quite the move, right? I personally think NVIDIA is going to pull back a little bit. First stop's probably right there. And again, I'm looking at this, I can't buy it up here. I would buy it on a pullback, but we would need to fill this gap in before I would get super interested in buying it. And maybe I'm wrong, but that is apparently is what's driving basically the whole market, or it did last week. Now I think that is kind of that story is done, and we moved on to other things now, right? And those other things are, of course, inflation. What's the Fed going to do? Give me some rate cuts. Give me some rate cuts. The market wants some rate cuts, for us to continue going higher. And we'll talk about that here in a second. But if we look at this, again, this is the ES, and we can do the SPX too. Same thing, basically. It's a great looking chart. As you can see, kind of the same thing. There's a gap. There's a gap to fill right there. Doesn't have to, but generally speaking, we do. And we'll fill that and maybe keep going. I don't know. Let's really simplify these charts, and I'll show you what I'm talking about here. So this, well, I'll leave that on there for now. There's a reason that I had that on there, those Fibonacci levels. That's a 20-day moving average. This is a 50-day, and this is a 200-day moving average. As you can see, we come down as we are going on this climb, and remember where we came from. This is SPX, right? Right there. Basically 4,100. We're at 5,100. That's 1,000 points in the S&P in 1, 2, 3, 4, basically 4 months, because that was actually not a full month, but 4 months. So you can say 5 months. That's a whole lot of movement in a little bit of time, right? So are we extended? I think so. Does that mean we're going to pull back? Not necessarily. The market is really heavily pricing in, heavily anticipating, high hopes that we're going to get rate cuts. And even third and fourth quarter last year, they were saying we're going to start to get rate cuts last year. And I was looking at that and I was going, I don't know who's, the market is saying that. I said it was pretty obvious it was not going to happen, right? And it didn't. And then we were supposed to get rate cuts in maybe January. That didn't happen. There is no Fed meeting in February, so it's not happening then. The probability of rate cut in March is basically off the table now, so it's being pushed off until June. I think that could get pushed off to July or maybe even September. So basically what the Fed is doing is kicking the can down the road to kind of wait and see what the data tells them, right? Because they're in a very, they're walking a very fine line. If they cut too soon, it's going to really, kick up some serious inflation, and we could cause some more problems there by cutting too soon. If they wait too late, the economy stalls out, interest rates are too high, it affects the home builders, banking industry, credit card, consumer, all that kind of stuff. So they're really in a tight spot. I think they will cut. I think it's probably looking like June now. But what we want to look for is the data points. That's what's going to tell us. So this is March. Let's fast forward here to, this is February. Sorry, this is February. We're about to come into March. So here's March. So what the next data point will be next, not this Friday, but next Friday we'll have payrolls. That'll be a pretty good indicator. But the biggie is going to be on the 12th. That's going to be CPI, our main inflation gauge for the consumer. PPI on the 14th there. Those two are going to be big days. Go ahead and put those on the calendar. If you want to trade some volatility in the market, better be there on the 12th, March 12th, because that's when it's going to happen. And I think personally those numbers are going to come in hot again. Inflation is not under control. It's not transitory, all that kind of stuff. We get another hot number, and that's going to really take a lot of wind out of the sails from the market, because the Fed has even kind of hinted that they may not even be finished with rate hikes yet, and the market's already factoring in 3, 4, 5, 6 rate cuts for this year, and it's just not going to happen. So when it finally kind of soaks in that it's not going to happen, it's probably not going to be good for the market. Now that doesn't mean that black swan, we're going to crash and burn, all that kind of stuff. That does not mean that. But we could certainly do a little consolidation. Now the next data point there is on the 20th, where we have Fed meeting. Again, they're not going to cut rates here at this March meeting. It's way too early. And again, I think we're going to get some hot data points here on the 12th and 14th. So be ready. Those are the next things coming down the pike. And if you are if you're just trading this market, watching SoundHound and NVDA and Okta and some of these names, that are doing all kind of wonderful things, that's great, and we are too, in moderation. But don't take your eye off the bigger picture of what's going on behind the scenes. That We could very easily go from this beautiful trend here to this kind of trend, and we could start doing this stuff. Again, it's too early to tell, but if you at least know that that's probably, honestly, a little more likely, then you can be prepared for it. You take profit when you can. You have some cash, and you got to know what to expect. The possibility of a retracement, the 50% retracement off this low gets you to 4,600. I don't think it's going to go like that. I think if it happened, it'd be kind of like this. It'll work its way down, pop back up, work its way down, pop its way. We'll stair step it down, most likely. And again, I'm completely, this is all speculation, honestly, at this point, because this will change on a dime when we get data points out, payrolls and the Fed and all that kind of stuff. We do have data points tomorrow coming out. We got CPE. What all do we have? Wholesale. We don't have wholesale. We got jobless claims, personal income, PCE, year-over-year, core PCE, PMI tomorrow, pending home sales. We've got a lot of Fed speak. So, a lot can happen. Let's look at one other thing real quick. So that's the SPX. Let's go to the NASDAQ. Kind of same thing. Beautiful chart. Look at that. It's a 20-day moving average. We're hugging that 20-day moving average. Boom, 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 boom. Hadn't even thought about coming down the 50-day. If we come down the 50-day, that's still not bearish. We need a little retracement to go the next leg higher. So these trends are still bullish. We've got to continue to think bullish in our setups, but be very aware and use tight stops and be ready to watch these data points come as they come out, and be ready to know that this thing, the other shoe could drop very quickly. I'm not short. I'm not setting up short stuff yet, but I am keenly aware that the farther we go up, we're over 1,000 points again off the low. The further we go up, the closer we are to a turning point. Maybe it's like this, and then we keep going. Maybe it's like this, and we keep going this way. I don't know. We'll know in a couple of weeks, about 2 or 3 weeks. So with that, let me wind it up. I wanted to keep this video kind of short. There's not really a lot to do right now other than to watch some honey badger kind of names and be very selective on our stocks, and also, again, use very tight risk control, risk management, tight stops and that kind of thing. So with that, let me wind it up. If I can help you, come to simplertrading.com. Check out our trading rooms. I have my own trading room. It's called the bias room. I'm in that room all the time, every day, and then I'm in the main room several times a week as well. A lot of good traders in there, so come join us. Let us know if we can help. So thanks for your time, guys. I appreciate it, and I will talk to you soon. Thanks.
Without Simpler Trading, I could not have financial independence.
This is one of the best investments I ever made in my life.
It's helping me find consistency.
It's one of the things that won me